What's up, guys? Coach Kev. So I'm just going to record this options workshop since the streaming is being a real pain in the ass. And you guys, I need to get this off my chest so we can get rolling through here. It's been quite a bumpy 6 weeks. I think I've had $1,000 in this account. And the thing that I've learned the most is I need to have some patience with options, and I need to learn how to profit take at the right time, which I learned. I got a theory about a couple weeks or just this last week. I definitely see where I made my mistake and how I can pivot to make the adjustment. So I started with $1,000 in this account, and I lost most of it down to about $400. And then I got it back up midweek. Last week I was up to about $1,700. Now I'm back down to about $700 in the account. All of this has been a learning curve. I'm not freaking out about it. I figured I'd have huge swings in this account because it's something I haven't completely developed a strategy for previously. Now that I'm into it and I see how these small accounts have to work, I kind of had to reposition myself, take some losses on some things that I didn't want to. I pushed some contracts too far into expiration and lost a lot of value on those. So I'll go over those lessons here. Some of them, I'm going to break up a lot of this option stuff into different workshops. Right now, this is going to be really basic: how to buy, how to sell calls, how Robinhood works, what calls and puts actually are. So let me pull up my notes here. On OneNote. All right, guys, so I'll make this a little bigger so you guys can see it. Options are pretty simple. They are, look at this, I put this in here last week, keep profits. Options a contract. It is a derivative of the underlying stock or asset that you're wanting to buy. So it gives you the right to buy or sell an asset at a fixed price. So you can think of it as insurance. You can think of it as many different things, but it's an agreement to buy at a fixed price, which would be your strike price. So the basics: a call is you're longing the stock. You believe the stock is going to go up and you want to secure the option to buy this price or to buy the underlying asset at a certain price. So the contract gives you the right to buy one contract gives you the right to buy 100 shares of your underlying asset. So once you agree to that strike price, say I wanted to buy Subaru and I like it here at 96, I think it's going to make it up over $100. So I could buy an option here to buy Subaru at, say, $97. And once it gets up over $100, I can buy my 100 shares at 97 and I'll have more value in Subaru shares. Or I can sell that option to somebody who's really wanting Subaru shares to somebody who wants to pay $97 for that. But for that reason, they're going to have to pay me a premium, which is where I make money. Because I paid a premium down here when I thought it was going to make it up over $100. Now, if they think it's going farther, that's when they would buy that option. The key with this is you have to buy enough time for that to actually transpire. So a put is the exact opposite. You think the asset's going to drop a certain amount, so that contract gives you the right to sell the shares at a certain fixed price. So you buy Apple at $200 and you want to make sure you can sell it at $200 so you don't lose any money. You can pay a premium, so this will be a little bit of insurance. You're going to pay, $2, which would be $200 for that contract, to sell the right to sell these Apple shares at $200. But if the price drops to 200 or 150 bucks, you are covered because you paid, the extra $200 to not get that loss. So you could hold this contract. If you held the $200 contract and it went down, this contract's going to appreciate because you can still sell this Apple at $200. If it were to go up, you would be out your $200. But you're up whatever the shares in the contract are. So the key to all of this is time value. And I'll show you in the Robinhood account where I got it. It's a perfect visual of what this looks like. Premium is what you're paying for the contract. It's usually it is priced out per share, so everything has to be multiplied by 100. If it's priced at $1, you're paying $1 per share, so you're paying $100. I want to talk a little bit of basics about funding your account and options, because options is a very risky investment. You can lose all or some of your investment. If you don't know what you're doing, please consult with a financial advisor. I am not a financial advisor. This is a video for educational purposes only. And now that we got that out of the way, why don't you guys like and share the video, and there will be more coming. So that will keep you, make sure you subscribe. That'll keep you informed when the next workshop comes. So fund your account. Take whatever amount. I was talking to a guy today, and he wanted to make 6 figures trading stocks and assets, which is great. That's an awesome goal. But don't go, if you're unfamiliar with something and investing, you might as well go to the casino and put your money on black and let it ride. You'll lose it a lot faster and a lot less painfully. Now, start small. So take 10% of whatever amount you want to put in and start there. Like if you got $1,000 aside, take $100, put that in your account, and you have 10 times of refunding that account if you lose all that $100. Now that gives you 5 $20 plays a week. And that doesn't sound like a lot, but once you get into these, you can buy some of these plays and really start compounding what you've invested on some of these options. And the biggest thing, stay calm, take profits. And I'm going to keep you guys updated with all the plays that I'm doing. If you want to stay updated daily, check out the Discord. There's a link in the description to our premium Discord, and I will be keeping everybody in our premium Discord up to date daily with the account and what we're moving, what the strategy is. So I know everybody wants to see the account. We're live today, so you get to see kind of how options move. Starbucks making a move up. Needed to break this 97 mark. It'd be great. But let's go ahead and pull up the Robinhood account. So yep, we're down to 709. That hurts, honestly, to show you guys this. I didn't want to show you an account that was down below where I started. And I started at $1,000. But it would be doing me a disservice if I didn't, or you guys a disservice if I didn't show you guys that this is trading. Taking loss sucks. $380 down in the past week. That's a bummer. And really, I'm down a lot more than that because I was up $601 earlier in the week. So really, I'm down about $1,000 in a week. I'm not going to let that get me down. I had a plan, and I readjusted my account, so now I'm not nearly as exposed. I took some losses, and I'm letting some things ride. I got some positions that I'm okay with letting ride, and they have enough time. So overall takeaway from this is you're going to take some losses. That's why you don't put it all in at once. That's why you don't put it all in at once. Have your patience. You're not going to get rich overnight. It's not going to happen. I've had some huge gains in here, and you give them back. Whatever is easy is not worth it. So I'm going to keep trading tomorrow. I'm going to keep trading the next day, and there's going to be opportunities for me to make all of this back and then some. So don't get discouraged. Number one lesson, take your time, have patience, keep working. So let's just go ahead and get into the option chain here. You can buy regular stocks. You can buy options on Robinhood. So here's my watch list. We'll check out silver. I like silver. Maybe we'll buy an option here on silver. I think it's going up over the next couple months. So here's where you would buy. This is buying straight shares of silver. So if I wanted to just buy shares of SLV, that's what I would do. But I want options. So I want these contracts here. Now here is where you buy and sell calls and puts. For this video and basic purposes, we are just going to be purchasing contracts. Now, this is one date for contracts. These expire one expiration. These expire this Friday on the 23rd. So the chance of silver, SLV, hitting $16, we would have to have almost a 2% move by Friday, and would have to close in the money for this to appreciate. Now, the closer we get, obviously, the more this is going up. Over the next couple days, I don't expect silver to go up. So this is probably going to depreciate and be less attractive to investors, because the closer it gets to expiring, the closer this gets to being worthless, unless the price is even closer. 2% on silver in a day happens, but then you'd have to get up over 609 to actually make any money, because you're spending 9 cents on this contract. But now as you go further out, you can see that that same $16 contract is worth 23 cents here, because now we have 3 weeks for silver to get up over $16. And you can sell this at any point along those 3 weeks. You can sell the contract out. So what I've found is usually the week before the week of expiry. So if this is September 6th, it's going to expire there. The end of around the 29th and the 30th is where you're going to, well, probably the 28th to 29th. The most market action is Wednesday, Thursday. Fridays are usually pretty dead. That's when you'd want to start closing these out. So if you think silver is going to go over $16.50 or come close to it within the next couple weeks, silver's down today. This option's actually down 47%, which I might pick one of these up for 11 cents. That's not a bad price. So let's go ahead and just buy one so you guys can see. I added this to my long call. Make sure I'm under buy. Because if you sell it, you want to short it, but you're basically shorting this contract as you're selling this to somebody, and you're agreeing to sell 100 shares of SLV to somebody at $16.50. So you have to have the shares to back this up. There's a way around that, but I'm not going to get into that in this video. It's a more advanced strategy. Now, if you look at the limit price right here, you have the ask and the bid, which is just like any other, and we can pull this up down here, the bid and the ask. So there's 5,293 bids for contracts at 10 cents. So you're going to be at the end of that line if you put in a 10-cent bid. If you want to get filled right away, somebody's willing to sell them for 11 cents. So we'll go ahead and buy one for 11 cents here. And see how it says max cost $11, not 11 cents, because you're buying 100 shares each. So 100 shares, if this was 2, it would be 200. My suggestion is start with one contract. That way, if you lose and you screw up the order, you're only losing $11. Like, I can get in here for $11, and if this thing goes up, 50%, it's going to go up 5 cents. I will have made $6, $5.50. It doesn't sound really exciting, but once you start building those up, that's where a lot of these big gainers come from. It wouldn't be much if this got over $16 for this to become a 25-cent contract. So that's where the opportunity lies in these. you just have to make sure you get time. So we'll go ahead and execute this. So you're paying $11 for the right to buy 100 shares of SLB for $16.50 per share by September 6th. If they're not up to $16.50 or higher on September 6th, this option will expire worthless. So you want to get rid of this before it gets to September 6th if we're not close to this, or my $11 is down the toilet. So see, this is kind of what I want my account to look closer to, where I have almost 50% buying power. I'd like to have more than this, but we're getting there. I had, I think, 10% buying power. Oops, that's not where I wanted to go. So let's get back to this. September 6th. Let's check one a little further out, 13th. So I can pay 5 more cents and get another week. Or I can pay 9 more cents and get 2 more weeks. I like those September 6th. Well, you know what? September 20s. I don't have any of these, and they're down quite a bit. I don't really want to spend that much. I feel like these are fairly priced. So 1, and I want this to fill, so I'm going to put it at the ask. Review order. Submit. And boom. Long filled. So that's the same thing on the put side. It works exactly the same. The controls are exactly the same, except this is flipped. So once you get down here, this is where these start getting cheaper. So $13.50 by Friday. That's options aren't pricing that in. Nobody thinks it's going to get there. So these are called, I probably should have went over that. These are called in the money and out of the money. Once the share price is past your strike price, whether it's a call or a put. So if it's a put, it's dropped below your strike price. That's when the share will be, the option contract has value. So the market maker will sell it at the end of the day on Friday if this is still in the money. If it's out of the money, it's worthless and your money's gone from what you paid for that contract. Same thing in the call. So if it goes up over your share price, these are in the money. $15.50 is in the money. Not very far, but $15.86. So really options are only pricing in a 6 cent move here. $15.86. So you'd have to pay an extra 6 cents on this option, and it would have to go up an extra 6 cents for you to break even, if that makes sense. So to keep it basic, that's how Robinhood works. If you guys have any questions, let me jump back to my notes and make sure I didn't skip anything. Stay calm. Stay calm. Like the video. You're going to lose some money. You're going to make some money. It's going to be a good time. It's exciting. The market's volatile. We'll make it back. And if not, we got a plan to refund the account with $100 a month. Yeah, and I'm going to do it just like that. If I blow this account up, I'm going to start it just like I suggested here. I'm going to do it $100 a month, and we're going to build it from there. So I hope you guys like this. If it helped, drop a comment, click like. If it didn't help you, click dislike. Either way, it helps me. So if you have questions, drop them in the comments below, and click the bell to stay up to date with the account and the workshops, the weekly workshops that will be coming. I will make a PDF of this document. I hope you guys enjoyed this video and it helped you out quite a bit. Check out the server. There's a link in the description. If you guys haven't opened your Robinhood account, check out my link. It will drop both of us as free stock. So how can we lose there? That's a win-win for both of us. Thanks, guys. Talk to you later.